Well, hello. Yes, it's me, Kenny Polkar, your host of the party, and I am back after out for a couple of days. Today is Friday, September 6th, 2024, and here are the things that you need to know about the trading day today. Well, it's all about the elephant in the room at 8:30 this morning. And September is living up to its reputation, and they're pushing hard for a 50 basis point rate cut in a week and a half, and pressure's coming from everywhere. And we are now fully engaged in the danger zone that we've been talking about. What are we having dinner tonight? We're gonna have the shrimp scampi. This one is delicious. Just wait till we get there. Okay, so good morning, America. Good afternoon, Europe, and good night to Asia. Guess who's back? That's right, it's me. So I missed a couple of days. And what happens? Well, I'm going to tell you what happened. The street, traders and algos are stamping their feet, demanding a 50 basis point rate cut versus the 25 basis point that the Fed has prepared us for. That's what's happening, and that's why the markets are under pressure. Now, since Tuesday morning, when I wrote my last note, the Dow has lost 808 points, or 1.9%. The S&P down 145 points, or 2.6%. The Nasdaq's down 592 points, or 3.3%. The Russell's down 85 points, or 3.8%. The transport's down 426 points, or 2.7%, while the equal-weighted S&P is off 144 points, or 2%. Nvidia, the tech darling that everyone owns a piece of, is down 10% since Tuesday morning. It's down 25% off the June highs of $140 a share, closing last night at $107.21. The dollar index is down, oil is down, the economic data is mixed, and they're telling us that Cammy's ahead in the polls. So naturally, the markets are focusing on the negatives in order to justify the demand for a 50 basis point rate cut. Now, do you remember the old adage, eliminate the negatives and focus on the positives? Yeah, well, they flipped that one on its head as well. Apparently, the saying goes, eliminate the positives and let's focus on the negatives. That's apparently what the theme of the markets are today. Because if they focus on the negatives, they can, or they think they can, force JJ into making a bigger rate cut. And why? Because if they create panic in the markets, coincidentally just weeks ahead of the presidential election, then they're going to put more pressure on JJ to make a bigger cut, or at least that's what appears to be happening, or that's what they think is going to happen. Remember what I've been telling you all along. We have entered the danger zone, right? Top Gun style. It is the August to October time frame in the markets. They get very unsettled. There's lots of volatility, and now we are right in the thick of it. Recall what I told you on Tuesday morning in the last note that I wrote. The VIX is at 1616, stuck between the trend lines at 1506 and 1649, once again suggesting complacency. It suggests that everything was good. There's nothing to see here. Time to just move on, which is exactly why I said you needed to remain cautious and pay attention. Remember, we've been discussing this August through October time frame. It tends to be a seasonally weak time of year. So we've got another 8 weeks to go. Gabish? And not that I'm calling for a meltdown, because I'm not. I am, though, calling for caution and cautiousness. That's all. Don't go betting the ranch. Stick to your plan and call your advisor if you're confused. That was what I said on Tuesday. Look what's happened. To be clear, the indexes are down 2.5% or 3%. That's hardly a meltdown. And if the market's up 16% or double digits and then backs off 3% and you're getting all worked up, then maybe we need to sit down and discuss that as well. You can say the same thing about Nvidia, right? It was up 184% year to date as of June 20th when it hit $140 a share. It has since backed off by 25%, but it's still up 116% on the year, closing last night at $107. And why do you want to run away? When Bloomies puts dresses on sales at 25%, they go in and they buy 3 more, right? They can't leave them on the shelf. So use the same logic. Use the weakness in key names to add and build to your long-term position. Now look, the key here is the word key. Key names. Names that are game changers. Names that become so significant to the current industrial tech revolution that you need to have some exposure. And Nvidia is just one of those names, which doesn't mean it won't go down anymore. In fact, it may. And as far as I'm concerned, I would not be surprised at all to see it test a long-term trend line at $89 a share if the eco data turns really ugly, or if the Fed panics and cuts rates by 50 basis points on September 18th versus the 25 that's already expected and built in. This morning, the pressure is building. Nvidia has already quoted down another 1.8% at 105.30, and it's only 7.30 this morning. Recall, a 50 basis point move is going to send a very different message to the markets, and unless the Fed can convince the markets, right, thinks the traders and the algos, that a 50 basis point cut should not be viewed as weakness or panic, which I think it's going to be, they run the risk of a temper tantrum. But here's the funny thing. They run the risk of a temper tantrum no matter what. If they cut by 25 basis points when the street is demanding 50, the algos are going to go into a high-speed sell mode. And if they cut by 50 basis points without being able to convince the markets that it's okay, then you're going to get the same reaction, but for a very different reason. You'll get a sell-off because the message will be that the economy is going over the edge, that the job market is collapsing, which it is not. Let's be clear, it is not. That the Fed missed it, right? Sending the U.S. economy into a recession, something that it has not done so far. It's keenly avoided that so far. So you see, they're really stuck, meaning the Fed is really stuck. They're stuck between a rock and a hard place. So you shouldn't be surprised, though, since I've been saying this for the last 7 weeks already. We've been talking about this. What I'm hoping for is that JJ remains steadfast and just cuts rates by 25 basis points now, and then 2 more times in November and then December for a total of 75 basis points by the end of the year, which is a little bit below what the street is expecting, 1 full percentage point cut. I don't think you're getting it. Because in the end, you got to ask, who's driving the bus? Is it the street or is it the Fed? It's like, who's running the house? Is it the parents or is it the kids? Karish? Now, that doesn't mean that you don't try to prepare for the downturn without selling your well-diversified large cap key name portfolio, because you can. You could do all this a couple of ways. You could build a larger cash position, right? That's paying you nearly 5% in money market funds. You can buy gold, right? Or you can buy the hedge. Think those contra trades that we talk about every once in a while, the DOG, the SH, the PSQ, that get you short different parts of the market, right? The Dow, the S&P, and the Nasdaq, respectively. As the indexes fall, those contra trades rise, thus the hedge. Or you can consider playing the VIXI, which allows you to play volatility. As the VIX rises, the VIXI rises as well. To that point, the VIX, which is the fear index, which had traded all the way back down to complacency territory last week, right around 15-ish, after exploding higher in early August, has once again raised its ugly head. And as of yesterday, it's up 39% this week alone, and this morning it's up another 12%, trading at 22.30 as we await the elephant in the room, the 8:30 a.m. non-farm payroll report, and that has kept the markets on edge this week, partly because everyone's been so conditioned to focus on this one data point. Now, the ego data this week has been interesting, right? Manufacturing PMIs were weaker than expected, but that's not really a surprise. While services PMIs were stronger than expected. Again, no surprise, because the service sector has remained hot. It's remained hot, it hasn't really settled down, and it continues to be hot. Yesterday's prices paid was also hotter. Think services costs are going up, and ISM services new orders was up as well. Now, this data point measures the level of new demand for services that businesses are receiving. A value of greater than 50 suggests expansion, while a number less than 50 suggests contraction. It's a forward-looking indicator, and if all the services indicators remain strong, that's going to keep inflation from retreating much further from where we are, because you continue to have upward pressure on services prices. And if the Fed makes money less expensive, which they're going to do, right, think rate cuts, then that's going to stimulate or possibly stimulate even more demand, potentially igniting the inflation monster all over again. Something that nobody wants to see. And we haven't even discussed all the new spending being proposed by both parties, the Democrats or the Republicans, which is only going to add to the inflation equation. So you really have to start to focus kind of on what's happening all around you. Now, that brings me back to the original argument. How is a 25 basis point or a 50 basis point cut in rates going to cause the price of food, consumer staples, utilities, housing, automobiles, or insurances to come down? Guess what? Here's the answer. It isn't. Who is kidding who? But that is what they want you to believe. You see, keeping rates at 5.25% is what's going to cause the price of those things to come down, because then we'd enter a recession. Because That's really what you need if you really want to see the prices of things come down, right? If you just want to see the pace of increase slow down, then do what you're going to do. But if you really want to see the prices come down, you got to force a recession. But let's not get crazy. Now, the expectation is for the non-farm payroll report to report 165,000 new jobs created, and for unemployment to drop from 4.3% to 4.2%, right? So here we go. If it comes in, say, between 135 and 175, then I think we get that 25 basis point rate cut. If it comes in below 135,000 new jobs, then they're going to be screaming for a 50 basis point rate cut, pushing JJ or trying to push him into the corner. The algos will go into sell mode, trying to create panic and force the Fed into that narrative. Then all we have to see is one or two of the Fed heads come out and suggest that very move. Now, San Fran's Mary Silicon Valley Bank fame daily already intimated such a thing, saying that the Fed needs to cut rates to keep the labor market healthy. And the intonation, which is what makes me think that she's supporting a larger cut versus a smaller one. I just want to know who's going to be next to fall, and then the next after that. So the members are Barkin, Williams, Barr, Bostic, Bowman, Cook, Hammock, Jefferson, Kugler, and Waller. I'm thinking it's going to be Bostic, and then it's going to be Barkin. But that's me. Oil came crashing down this week, slicing right through the 72 level, a level that I thought was going to provide some support. This story about ongoing worries over a slowdown in China and the possibility of a U.S. economic slowdown, and guess what? The surprise return of Libyan oil to the markets, all putting pressure on oil. All while OPEC Plus announced a delay in the October production increase that has been on the books for months now, right? Even that announcement failed to slow the decline of oil. The October increase has now been put off. The October increase in production by OPEC has now been put off until December of 2024, with 2.2 million barrels per day gradually reintroduced to the markets over a 12-month period. Oil has now broken all three trend lines. They've broken the July-August support level at 72. They broke the December 2023 lows of 68.92 before settling at 69.21 yesterday. This morning, oil's trading at 69.55. So it's trying to struggle there. Gold bounced off the $2,500 level on Tuesday and rallied right back to mid-century at 25.50, as it too is now not sure whether we're getting 25 or 50 basis point cut. All as we await today's NFP report. Lower rates are going to help support gold, and a 50 basis point cut is certainly going to help support it more. Gold remains in the broader 2,500, 2,600 trading range, and futures are under pressure. Futures this morning are lower. Go figure. Dow down 175, S&P's down 40, Nasdaq down 215, and the Russell's down 14 points. All of this as we brace for today's report. Recall, many analysts are considering this a crucial data point and are pushing hard for a 50 basis point rate cut. But I repeat, I do not think the Fed's going to push the panic button. I just don't. Remember, keep your eyes open for that special report from Goldman, or maybe a front page Wall Street Journal article from Nikki T. Both of them act as mouthpieces. I like to say deep throat for the Fed. When the Fed can't say it, when the Fed doesn't want to put something in print, when the Fed wants to take the temperature of the market. They put out, they go to those two and they put out the stories to test the market. So in this case, we need to watch for why a 50 basis point cut is likely story in the days ahead, if the Fed is really considering a 50 basis point rate cut. Remember, next Wednesday, the 11th, begins the quiet period for any FOMC member. They can't say anything to the media, but Goldman and Nikki can. Capiche? European markets are all a bit lower this morning. Markets across the region all down about 0.3%. Nothing dramatic, but they are lower. Investors in Europe are also waiting for the news, so they can also consider what's next, not only here, but what's next possibly across Europe. The S&P closed at 5503, down 16 points. Besides today's NFP report, next week we're going to get one more inflation data, right? CPI and PPI before the Fed meeting. Neither are expected to surprise to the upside, so don't look for them to change the current narrative, because I don't think it's going to happen. In the end, it's important to always take a balanced approach to long-term investing. Building a strong, well-diversified portfolio takes time and commitment. Give me a call to discuss. I'm always happy to do it. You can get me on, go to my written blog, and there's a link there to click on. This morning I'm on Varney & Company, Fox Business at 9 o'clock, and I'm going to be on the Larry Kudlow radio show on Saturday at 12 p.m., WABC Radio. So tune in. I hope you join me. Okay, so what are we having for dinner tonight? So this is really, it's a great dish. It's just kind of a twist on the traditional shrimp scampi, because this one uses shallots and cherry tomatoes to kind of enhance and create depth and flavor to the dish, right? Because you slice up the shallots and you slice the cherry tomatoes in half, and then you add them out. We're going to get to it. I'm going to tell you what you need to do right now. So you need just a couple of things. You need a pound of large, clean, deveined shrimp. You need butter. You need olive oil. You need garlic. You need lemon. You need a splash of white wine. You need shallots. You need those cherry tomatoes. You need chopped parsley, right? And you need salt and pepper. And of course, then you need the linguine. You want to bring a pot of salted water to a rolling boil, leave it on the back burner just so that it's ready when you need it, right? Keep the cover on it, just leave it so it's ready. In a big saute pan, one that's going to accommodate the pasta, you're going to melt the butter, you're going to add a splash of olive oil, and you're going to add the crushed or sliced garlic and sliced shallots. You're going to saute those around, keep the heat on medium so that you don't burn the butter. Now, after 3 or 4 minutes, 5 minutes, maybe you're going to add a dozen sliced cherry tomatoes, season it with salt and pepper, saute until the tomatoes burst and really begin to melt, right, creating their own sauce. Now you're going to add the juice of 1 lemon. You're going to complement that with just a splash of white wine. The Pinot Grigio Santa Margherita works great here. You're going to turn the heat up to high, letting kind of the alcohol steam off. Now you're going to add the pasta to the water. You're going to let that cook for 8 minutes till it's al dente. Now, go back to your saute pan. You're going to add the shrimp. You're going to season it with salt and pepper, and you're going to saute those quickly until they're nice and pink on both sides. It's going to take you 5 minutes maybe, because you're going to use the big, large deveined shrimp, right? You're going to strain the pasta with just tongs, take it right out, and putting the pasta right in the saute pan. You're going to mix it and serve it. Now, you might need to add a little bit of the pasta water to keep it moist. Go right ahead and do that, because you want the pasta will suck up the juice, right? You're going to serve this in warm bowls, and always have fresh grated Parmigiana cheese on the table for the guests. It doesn't get any better than that. The only thing you could do to make this better is have a side of fresh Italian toasted garlic bread on the side, because that never hurts with this dish. In any event, look at this. It's kind of warm and muggy out here in South Florida. The skies are a little bit cloudy. It's not blue, sunny, blue, clear skies. I wonder if that's indicative of what we're going to see today. In any event, until Monday, have a great weekend. Take good care.